Welcome back to Top Down, Bottom Up. Today, we're looking at the market from a top-down view. And on the chart behind me, you're gonna see the S&P 500 just to recap last month. We had recovered from the bottom with everything that happened in the Middle East, and we were talking about some possible downside in the market, but we did also see an all-time high breakout, which was a bullish or a positive signal for future gains. So now let's look, what did the S&P 500, what did the market do in the past month? If you look at this chart behind me, you see a continuation of a move higher. It was actually a pretty historic month, and it was fueled by semiconductors and the AI trade. Now, it's important to know that the market moves in different ways. Not every single stock always goes up. So when we look at what we are trying to position your accounts for, it's really insulated gains. So if you look at the chart behind me now, you'll see the Dow Jones. This is more of what's called a value index, or stocks that aren't necessarily the high flyers. Notice how the breakout just happened. This gives us an idea to say, where is the market moving next? And that's where we want to be. We do believe that there's going to be kind of a rotation from those really high performing semiconductor stocks into other areas of the market. Things like consumer staples, real estate, industrials, materials, and even back to energy. This all kind of surrounds itself on where we're at in the cycle. It's a midterm election year. You guys are probably very sick and tired of me saying that, but there could be more volatility. Now we're entering into the June period, which has historically been a little bit of a weaker area of the market from the standpoint of this broader cycle. So we want to make sure that we are preparing your accounts in the correct manner. And we have had a lot of activity in the last month. And I want to show you just one more thing before I turn it over to Brian, but this is a chart of the 10-year Treasury. Interest rates are all over the news these days. People are fearful of inflation, government debt, but when we look at the market, we want to just look at math and we want to look at statistics. This 10-year Treasury has bumped up against what we call resistance, which I've highlighted in red multiple times over the last 5 years. We hit that range and actually moved lower. What this tells us is that bonds could be pretty attractive. So we're doing a lot of different activity, not only buying defensive, but also buying bonds that are going to give us good interest rates, a little bit more safety, and we're going to try to, again, provide some insulated gains over the next couple months. Now I'm going to turn it over to Brian for the bottom up.
All right, so it's time for bottom up, and as always, we've been active and there's a lot to cover. So let's get right into it. So Jake mentioned that the rally in the markets that you've seen has been based on technology, notably the semiconductor sector, but we still believe that diversification is the key. So where is that proverbial puck going? Well, we still like materials, and we've added to our positions in Dow Chemicals and also Pittsburgh Paints. We also believe that energy stocks are still good to own, and we have Devon Energy in our portfolios. And we also like Microsoft, obviously a pretty well-known name that has performed well since we entered into the position on May 29th. Now, as interest rates are moving higher, like Jake had mentioned, we think that longer-term bonds are starting to become more in favor, and there's some bonds that are paying close to 6%. So we want to be owning those to help get through whatever volatility might be ahead and to provide some income for folks that own bonds. Now, on the sell side, not that we don't believe it's a good company, but Lowe's has been a position that didn't quite work out the way that we wanted to. And we'll be comfortable taking losses in certain positions, especially years like this when we have a lot of gains. So we sold Lowe's for a loss, but we sold Ford for a gain after it popped about 35% higher unexpectedly. We don't want to be greedy there, so we took some chips off the table. You can read about our stock of the month. It's Dutch Bros, and check that out in Stock Stories and why we believe it's a good company to own. But as always, this has been Jake and Brian, top down, bottom up. Stay in touch with Econ Wealth Management.